Good weekend, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, your weekly edition, and this is for Friday, the 14th of April, 2023. Gorgeous here in Chicago in the 80s. I can't believe April in the 80s, the whole week of it. They're talking maybe snow flurries or snow on Monday, but this was just unbelievably beautiful. And, it brings out, weather changes are happening. I laugh that we'll have palm trees here. I'm not laughing so much. It's pretty crazy. I don't know if you saw 2 feet of water falling in Fort Lauderdale. Can you imagine 2 feet of water falling? And Fort Lauderdale, the water doesn't just absorb back into the ground. Beach communities aren't quite that way. It would be even worse in South Beach, which was a man-made island. That would just be terrible. But it's what it is. Now, this was the week that we dealt with CPI numbers, and I thought they were sticky. I think there's every reason for the Fed to go the quarter point. I see nothing that has come out so far to say different. But it's only the 14th of April. Could be another bank issue. There could be something I know nothing about. But barring that, why would the Fed back off? I listen to everybody saying they're going to back off. I don't see it. Employment is still good. The unemployment claims have gone into the 240s. I see that. But it's still strong. It's a very strong market for that. And when you have sticky inflation of 5.6% core inflation, and the PPI number did what it did, it's still looking excellent. What's the Fed got to lose by going the quarter point? And then you'll say, well, that'll be it, one and done. You know that. I don't know that. If the Fed is truly data dependent, the data will determine what the Fed's going to do, not that. I think there's enough Fed members that have come out also to say the Fed is going the quarter point. They're not seeing anything yet to be scared of. And for the moment, the banking crisis is abated. The big boys all came out and they're making money. They're getting deposits. A lot of people didn't think that would happen, but it did. When you dig under the hood, it's not the prettiest picture. Thank God for the deposit numbers coming in and the extra money that makes. Where I'm nervous is the mid-tier banks. That's not the big boys. I'm nervous about, again, these other banks, the Republics and all those type of banks that we have to worry about, the ones that have the commercial loans, and what are they going to do? Where's the pressure and all that? Are they going to get another issue come up? I don't know. I know for the moment it has abated. I do not agree at all with Miss Yellen. I think she's become politicized. I mentioned that, and I'll stick with what I said. She was a very good Fed chair. She was independent. The Secretary of the Treasury is appointed and serves at the pleasure of the president. So when she says, no, bankers are not going to cut back, I'm watching the IMF today. I'm watching the World Bank. They're on. I'm looking at the presidents. They're all seeing this taking place. Where is she? Does she know more than these people? I don't think so. I think she knows a lot, and I think she's bright, but I think she's politicized, and it's easy to carry the president's message. The bankers are going to be there for you. Let's see if that is, in fact, the case, okay? If it is, first one to say, Ms. Yellen, I was dead wrong. Okay, fair enough. And I do respect her tremendously. So that's where we seem to be. And what was today? Every day this week has been a run on the upside. To see the stock indices and the stock market finally give back something, it's almost like, thank you. I think it was needed. And so you look at those type of things and you try to say them. Nothing goes in a straight line forever. Corrections coming in. Now, we had been talking about CarMax, and you can see how the market is done. It did jump $5 for the week. So overall, looking okay. When we put on the swing line, it doesn't look like the daily chart. You have a higher high and a lower low. What you have is a market that came into the old lows, a triple bottom area now is what we can call it, and found its support there. What you don't want to see is the market slide, let's say, and close under $50. That could be a very telling sign of problems. I am not saying that's going to happen. That's what I don't want to see happen. Where'd the market go? Well, it was able to nicely this week get right back over the 18-week average of closes. The market had been fighting a battle, as you can see, coming back up to it. It had come down, bounced around it, and now market just got itself back over it. So if we get pullbacks, look for that to be the support. Is there a trend at hand? There isn't. You don't have the higher highs, higher than lows. What you do have is upside bias. When a market is over the 18-week average of closes, this line in the red, I have upside bias. Under it, I have downside bias. Bias is a filter for my other indicators. Got it? So if I have a buy signal in swing lines and the bias were down, I don't want to take the trade. But if I have a buy signal on the swing line and the bias is up, two of the elements are there to take the trade. There's other elements. Where might this market be headed? Well, if you take a look, what you've really done is you've gone from the upper band to the lower band, and if you run up any more, you probably go to the upper band. Here, you had sideways action, and the word is sideways. You were hitting the lower band, you came back to the upper band, came down to the lower band, went back to that line in the sand, and when you broke through, you had been here for 2 months. This is a weekly chart, 3 months. Eventually, the market makes its move. Even then, it has trouble staying outside the Bollinger Band. So if we come up, the odds are 95% of the time, the market will come up and run into a brick wall against that Bollinger Band, partially because this is not a narrow set of bands. This is broad enough where I think that's where the resistance will come in. If you don't know how to work with Bollinger Bands, learn. There'll be an ad about it at the end of this. At any point, you can move your cursor to the top here, and there'll be an icon. Click it, and it'll take you right into the area where you can learn how I teach and what's going on with that. It's an important tool, because if you look at the chart, without it, you'd say, well, where did that resistance come from? You have to. There's no other number there. Pull it off. You'll see what I'm saying. Momentum-wise, got to tie it with momentum. I tried trading off Bollinger Bands for years, taught to me by the man that created it, John Bollinger, okay? I took his courses. He's got a great website. I invite you to go there, okay? I have a different way of doing it than he does, but everything I learned was from him. The difference is not, I don't modify his study. I modify the slow stochastic with it because I so much believe that momentum is as important. In fact, it's more important than price because it leads price most of the time. Well, right now the market's just whipping back and forth. I can see the resistance 77.05. I'm bothered by Schwab. It's not even bouncing. Now, that does not mean it has to fall apart any further. It's done its damage. Volatility has come out of the chart, is what's happened. The question is this, and I heard the question asked today on CNBC at the end of the day as they were saying, do you want to own Schwab? And I think it was an instant, no. That simple. And the reason I think is because we don't know what's going on. All right? As a chartist, I am in the bear camp. You either embed or you're oversold. So I'd be waiting to see which one. Do I tell my clients that I like to sell the first move under a 200-week average? No, I tell them no. Why? That's a 4-year moving average. It went through it like it didn't exist. That is so unusual. As we dug in at this point and we learned, we saw that we heard about TD Bank and what they're involved with them. A lot of the holdings here, just like in the mid-sized banks, they've taken money, they're holding it on the books a certain way to earn the interest on the money. Even though they pay interest to brokerage accounts, they spread between it's monstrous. And if they move that from holding from maturity to shorter term, their haircuts change. And that would mean possibly, I'm not saying I know enough about this, would they have to say, we got to raise some more capital? That would be the kiss of death. So they're not going to do that. I don't know what they're doing, but why is it just laying down? So I don't know. You might know. I truly don't know. Then I matched it with First Republic, which is done, as you can see, but where you at on this thing, all right? It's just dead. KBE, lower highs, lower lows. By the way, I don't know why they still put those numbers there on that. I just wanted to bring it up. Oversold in a downtrend sort of reminds me, I got to come back to this, Schwab. If I took the name off this chart and gave you this chart, what do you think? Is it a proxy for Schwab, or is Schwab a proxy for this? But boy, do they not look the same? Okay. Let me come back over here. Next chart. The industrial sector, still in the bear camp. You have to get back up and over, as far as I'm concerned, 101.70, and I'll come to that number for you right here, 101.77, because what you've set up now are lower highs, lower lows. Now, where did the market finish? 99.83, so it finished under the 18-week average. The problem is that the pros that are selling it here, are they covering at the 100 weeks? Or are they selling at 109 and covering 98, 93? I think they are. And if you can take out this week's low, that's when they'll press the market, looking to see if they can get to the Bollinger Band. I'm making this up. Do I know? I don't know, but that's what I would look at. Let's flip the other side of the argument, because it's a two-sided argument. What if you get over 101.77? Well, the argument could be you've made your higher lows, higher highs, open up the door for 104.35. Momentum's not telling us any story. It's just drifting sideways. XLE, the energy sector, it's fought here and it's done a nice job. It got over and it closed over the 18-week average of closes. So suddenly the bias is up. We have a pattern here where this high finally took out that high. So we have a lower low, higher high. It is not a setup as far as I, as a chartist, would say, come on in and let's play. You know why it rallied. It was coming down hard, and OPEC Plus stepped in and they changed the whole supply game of energy. All right. Now, how hard are they going to do that? I think they're going to be hard. I think they're going to hold it. I think they, if you get my full research that I write, there was a chart that came out and showed the impacts of 70, 75, 80, $85 oil all the way through, and what different nations that make up OPEC and other countries, they did with the U.S., how it helps or hurts us, the same with the U.K. It does. It was a fascinating report. I forgot who put it out, but they always get credit in my reports, and it was quite good. Then we get to FXE. Okay, so I happen to think the dollar has made a serious major top. I think that we are closer to stopping interest rate hikes and just keep going. I don't know if we end up at 5, 5.25, 5.5. I'm not that good. But I do believe you're going to get a May hike, and then we have to see what everything looks like. As the Fed said, not IRA says, they're data dependent. The data right now says you go with a May hike. CPI 5.6%, employment strong as can be. Claims numbers, jobless claims in the 230s isn't anything to get worried about. I can go on and on. PPI, good numbers. I'm sorry, I don't see anything to stop the Fed. Could they not do it? Of course, I don't know what they'll do, but I think they're going. On the other hand, I don't like buying the first challenge of 100-week average when you haven't been there since, I got to take you over here, 2021. So generally you get up to these numbers and they're logical first resistance numbers. So the Bollinger Band in that, let somebody else want to own it up there. That's how I do it. Am I bearish? I am not. I'm bullish. Looking for a way in, but using the daily charts, not the weekly. But when I'm over the Bollinger Band on the weekly, my daily charts, I don't care what they say, I don't enter. For my clients, I don't tell them you buy. If I did, I made a mistake and I catch it and we talk about it. In gold, same resistance. You're at the Bollinger Band. You got to learn these Bollinger Bands. The odds of staying over that band 5% of the time. Does it mean it could run it? Oh, it could. But generally when you do that, you embed like you did here. Do you see how the red and the blue are going sideways over 80? That's how that works. You're not there yet. So I back away and I say, okay, I'll wait for a better setup. I'm certainly not in the bear camp. I may miss opportunities for my clients. Okay. When I take a look here at the gold miners, I like them way better than I do the gold. But today I was looking at it and I was telling them to come in, but I warned them. I said, we are at that Bollinger Band. You got to be very careful, all right? And SIL is the same way if you pay attention to it. Now, Tesla, we're going to get Tesla's numbers now. I think they come out this coming week. We will see what they do. They've just moved into another part of the world and said, hey, we're going to take our car prices down as much as 25%. They want market share. They want to go after some of the Chinese companies, if you will, that are making inroads. They certainly are after European and US companies that we're all getting our cars going. And this does what? When you get a well-entrenched manufacturer that can keep lowering the price of their car, and they have the economy of scale. They can do this. They just have to sell more cars. It makes it really hard on every other car manufacturer, because other than them, there's very few companies that have economy of scale. They've been doing it and they're there. I want to see what it'll do. The trend is down, the bias is up, and the market's married right now to the combination of the 200-week and the 18-week moving average in an overbought condition. Get underneath 163.91 and you open the door, in my opinion, to lower prices. AMC. Okay, I have no idea where the court battles are. That's part of what you're fighting. How are they going to get all the stock in? My bigger question is they keep talking of floating $16 billion worth of notes. What nutcase is going to buy these? Now, they may not be so nuts. Maybe I'm the nut. What if they're going to pay 12%? You think I'm crazy? I don't think I'm crazy. What if they're going to pay some crazy number? What if they get bought out by a conglomerate move of Amazon and Apple getting together and say, hey, we need a venue to release our first run movies. We're production firms. We got movie houses. Maybe this is illogical. I don't know. It's sort of just hanging here, not doing anything, but it's not exciting at all. Apple laid a trap this week called a bear trap. You had an outside, I shouldn't say outside. At first you had a higher high, lower low. You broke through the low and you popped right back through the high and you caught the traders. But I don't think you're going all that far. I can make an argument for the 171.5 zone, about $6 higher. I'm not bearish on this. You have the embedded reading. Take a look. Both numbers at 90 over 80. Here, one's 80, 180, 90. You got a fully embedded reading. So until the red line closes under 79, pullbacks in the market, I think, on the longer term chart are certainly going to be looked at by the bulls and trying to come in. That's my opinion. TLT. If you looked at the futures markets, you can see what happened. Remember, these markets all rallied off the news of the Signature Bank and the whole banking crisis, right? And they're starting to work their way back down here. Be a little cautious right here, okay? As the market's starting to say, maybe the Fed's got to keep doing something there. And that's what scares me. So you put it all together, you try to come up with a game plan. One of them is learning how to work with those Bollinger Bands that you hear me talk about on every single recording. I am not, how do I say this? Once I learned them, I learned how brilliant John Bollinger was to put this together, and that's a big compliment, and what it means if you learn how to work with it. It's important. It is not an entry tool. I view it as an exit tool. And that's all that it is to me. It's a point of exit. And it tells me a lot about a market. How do you work with it? How do you do that? Remember, you can click up here. It'll tell you that. You can look at our advertisement on it and click at any point up on the top of your screen. That'll do it. Or go to our website, iraepstein.com, under education. In the meantime, I wish you all a great weekend, and I'll see you come Monday morning. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.